Hello and welcome back to the channel. Today we will be going through more property and casualty insurance basics to help you prepare to pass your exam. Contract of Adhesion is a contract where one party, the insurer, writes the terms and the other party, the insured, must accept it as is. There is no negotiating. An example is when you buy car insurance online. You can choose coverage limits, but you can't change the wording of the policy. You either accept or decline it. Aleatory contract is a contract where the value exchanged is unequal and depends on uncertain future events. An example is when you pay $500 a year for homeowners insurance. Your house never burns down, so you never get anything. But if it did burn down, the insurer might pay out $300,000. Unilateral contract is when only one party, the insurer, makes a legally enforceable promise. For example, you're not legally required to pay your premium, but if you don't, coverage stops. The insurance company, however, must pay claims if you do keep your part. Now we're moving on to legal interpretations that affect insurance contracts. So we begin with ambiguities in a contract of adhesion. If there's unclear language in the contract, courts usually rule in favor of the insured. For example, if a clause about water damage can be read two ways, the insured gets the benefit of the doubt. Reasonable expectations are when courts protect what the average person would reasonably expect from the policy. For example, if a policy seems to cover theft but buries an exclusion deep inside, the court may side with the policyholder. Indemnity is when insurance aims to restore you to the financial position you were in before the loss, no more, no less. For example, if your TV worth $800 is stolen, the insurer replaces it or pays $800, not $1,500. Utmost good faith is when both parties must be honest and disclose all relevant info when entering the contract. For example, if you lie about having a security system to get a homeowner's discount, it can void your claim. Next, we have representations and misrepresentations. A representation is a true statement you make to the best of your knowledge. A misrepresentation is a false statement. For example, you say you've never had an accident, which is a representation, but you actually had one and lied, which would be a misrepresentation. Warranties are a strict promise that something is true or will happen. If broken, coverage may be void. For example, you guarantee your business has a sprinkler system working 24/7. If you turn it off, coverage can be denied. Concealment is intentionally hiding important facts. For example, you don't mention your home has flood damage when getting homeowners insurance. That's concealment. Fraud is an intentional lie or trick to get benefits under the policy. For example, you set your car on fire to collect insurance money. That's fraud. Waiver is when the insurer gives up a legal right on purpose or by accident. For example, if the insurer keeps accepting late payments, they may have waived their right to cancel for late payments. Estoppel. Once the insurer gives up a right or allows something, they can't take it back if the insured relied on it. For example, if the agent says you're covered even with your dog, and you rely on that, the company can't later deny the claim for that reason. Now let us move on to practice questions. In a contract of adhesion, who has the power to write the contract terms? The correct answer is C, the insurance company. A contract of adhesion is a take-it-or-leave-it type of contract. The insurance company writes all the terms and conditions, and the insured has little or no ability to negotiate them. If the customer wants insurance, they must accept the policy as it's written. Next question. What is the principle of indemnity designed to do? The correct answer is letter B, restore the insured to their pre-loss financial condition. The principle of indemnity means that insurance is meant to make you whole again after a loss, not to help you profit. You should be restored to the same financial position you were in before the loss occurred. No better, no worse. Thank you for watching. Please subscribe.